If you're thinking about buying a home in Southern California in 2025, do not take another step until you've watched this video. Because this year, some cities are showing dangerous warning signs in the housing market that most buyers aren't even noticing. These are places where prices are far higher than the market can support. Inventory is climbing, and the local economy is weakening. If you ignore these signals, you could end up sinking hundreds of thousands of dollars into a property that loses value in just a few years. Southern California is home to some of the most famous, most beautiful, and most expensive real estate markets in the world. The beaches, the lifestyle, the perfect weather, it's a dream for many. But remember, beauty doesn't always mean a good deal. In some cities, buying a home today might feel like a dream come true, but tomorrow it could turn into an expensive nightmare. In the next few minutes, we're going to reveal the 10 cities where current data, market trends, and economic realities are all flashing the same message. Don't buy here right now. Whether you're a first-time buyer, an investor, or just curious about where the market is heading, this information could be a game changer for you. And if you want the most honest, up-to-date real estate insights without the hype, make sure you subscribe to the Real Estate Scout and hit that notification bell. We're here to give you the knowledge you need to avoid costly mistakes and make smarter moves in real estate. All right, let's get into it and see which Southern California cities you should avoid buying a house in for 2025. Number 10, Santa Barbara. Let's start with Santa Barbara, often called the American Riviera. Stunning with Spanish-style architecture, breathtaking beaches, and a picture-perfect climate that draws people from all over the world. On the surface, it seems like the ultimate place to own a home. But behind the postcard views, the numbers tell a very different story. The median home price here has recently hit $2.5 million, nearly 5 times the national average. Even for high-income earners, that kind of price point is out of reach for most buyers without taking on enormous debt. The price-to-income ratio in Santa Barbara is one of the worst in the entire country, meaning that local salaries simply can't keep up with home values. Add in today's mortgage rates, and affordability is at a breaking point. For example, a typical 20% down payment on a median-priced home here is about $500,000, and that's just to get started. Monthly payments can easily top $10,000, not including taxes, insurance, and maintenance. Speaking of insurance, costs here are climbing fast due to wildfire risks and stricter building regulations. Some homeowners are seeing premiums double or even triple in just a few years, adding thousands more to the annual cost of living here. The reality is this: while Santa Barbara's charm and beauty are undeniable, it's becoming a market where only the ultra-wealthy can buy and hold property comfortably. And history shows that when affordability collapses like this, markets often see price corrections, sometimes steep ones. So, unless you have the cash to weather potential drops in value and skyrocketing expenses, you might want to think twice. Before buying in Santa Barbara in 2025, the view might be priceless, but the risk could be too high. Number 9, Beverly Hills. Next on our list is Beverly Hills. The name alone is a global symbol of luxury. The palm-lined streets, high-end shopping on Rodeo Drive, celebrity mansions, it's the image of the glamorous California dream. But here's what's really happening in 2025. The luxury housing market in Beverly Hills is showing signs of serious strain. Inventory of unsold homes is up 45% compared to just 2 years ago. The average time on market has increased by 67%. That means properties are sitting much longer before finding a buyer. Part of the slowdown comes from new mansion taxes aimed at high-value properties. For multi-million-dollar homes, these taxes can add hundreds of thousands of dollars to a sale, and wealthy buyers are taking notice. Many are choosing to buy in areas with lower tax burdens or skipping California entirely. Another factor is shifting buyer preferences. Post-pandemic, more affluent buyers are seeking larger lots, lower density, and better tax advantages in other states. Beverly Hills, while iconic, is losing a slice of its once guaranteed luxury buyer pool. And here's the thing: when a luxury market softens, it often signals trouble for the wider region. High-end sales influence property values across surrounding neighborhoods, and a slowdown at the top can put downward pressure on the rest of the market. Beverly Hills will always have prestige and beauty, but as an investment in 2025, the risks are growing. Unless you're buying purely for lifestyle and can absorb potential drops in value, this may not be the year to enter this market. Number 8. Malibu. The word alone brings images of breathtaking ocean views, celebrity beachfront mansions, and some of the most coveted real estate in the world. For decades, it's been a dream destination for those who can afford the price. But in 2025, buying in Malibu comes with a hidden cost that's catching even wealthy buyers off guard. Insurance, wildfire risk in the region has skyrocketed, and so have premiums. In the last 2 years alone, some insurance costs have surged by 300%. For many homes, that means annual premiums exceeding $50,000. You can even find coverage at all. Several major insurers have pulled out of higher-risk California markets entirely, leaving new homeowners scrambling for limited expensive options. Without proper insurance, a multi-million-dollar investment can quickly turn into a massive financial liability. And that's not the only concern. The Malibu market is extremely high-priced, with median home values in the $4 to $5 million range. Combine that with rising mortgage rates and growing maintenance costs for coastal properties, and you've got a perfect storm that makes entry into this market riskier than ever. Malibu will always have its charm, but 2025 may not be the year to take the plunge unless you're ready to absorb high carrying costs and potential value drops. And if you want to stay ahead of the market with honest, data-driven insights on where to buy and where to avoid, make sure you subscribe to The Real Estate Scout. We bring you the facts you need to protect your money and make smarter moves in real estate. Number 7. Ventura. Ventura was once known as the more affordable coastal alternative to places like Malibu or Santa Barbara. With a charming downtown, great surf spots, and a relaxed beach town vibe, it became a favorite for buyers looking to enjoy the California coast without paying ultra-luxury prices. But over the last few years, Ventura's housing market has changed dramatically. The pandemic brought a wave of remote workers from high-cost areas like San Francisco and Los Angeles. Many of these buyers came with deep pockets, driving the median home price up to around $950,000, far above what the local economy can support. That's where the red flags start to appear. Ventura's job market, while stable, doesn't generate the kind of incomes needed to sustain these prices long-term. If remote work opportunities shrink or economic conditions tighten demand from outside, buyers could fall quickly, and with it, home values. We're already seeing early signs of cooling. Some neighborhoods have dropped 8% from their 2022 peak, and days on market are beginning to creep upward. If interest rates remain high, that trend could accelerate. Ventura is still beautiful and offers a fantastic lifestyle, but from an investment perspective in 2025, the risk of a market correction is real. If you're buying here, make sure you're prepared to hold through potential downturns. And if you want more clear, no-hype breakdowns of markets like Ventura, plus the cities that actually make sense to buy in, hit that subscribe button. For The Real Estate Scout, we'll keep you ahead of the trends so you can protect your investment. Number 6. Newport Beach. Newport Beach has long been one of Southern California's crown jewels, a place where luxury yachts line the harbor. High-end shopping thrives, and the beachfront properties feel like something straight out of a movie. For many, it's the ultimate coastal dream. But in 2025, that dream is showing cracks in the foundation. The luxury housing market here is softening fast. Homes that once sold in a matter of weeks are now taking 3 times longer to move. Even more telling, nearly 40% of listings are cutting their asking prices to attract buyers. When you're dealing with properties in the $3 to $5 million range, a price cut can mean a loss of hundreds of thousands of dollars in potential equity. That's a serious hit, even for high-net-worth buyers. This slowdown isn't happening in isolation. Across Southern California, luxury markets are feeling the impact of higher interest rates, increased property taxes, and shifting buyer priorities. Many affluent buyers are now looking for lower tax states, or investing in multiple smaller properties. Instead of putting all their money into one ultra-expensive home, Newport Beach will always be an attractive place to live. But right now, the numbers suggest that patience could pay off. If you wait, you might find better deals and avoid buying at the peak of a cooling market. And if you want to stay on top of these market shifts and spot red flags before they become headlines, make sure you subscribe to the Real Estate Scout. We'll give you the data and insights you need to buy smart and protect your wealth. Number 5. Riverside. Why you might want to think twice before buying Riverside might seem like a dream for those who want to be close to Los Angeles without paying LA prices, but lately the shine is starting to fade. Home prices here have skyrocketed over the past few years, but wages haven't kept up. That means more people are stretching their budgets just to get into the market. On top of that, Riverside's inventory has been growing, which is often an early sign that sellers are having trouble finding buyers. And while the inland empire once drew people for affordability, the cost of living has been rising, especially utilities and transportation costs. Combine that with rising property taxes and higher interest rates, and many buyers are starting to question whether now is the right time to jump in. If you're considering Riverside, make sure you factor in the potential for slower appreciation. Compared to nearby coastal cities, it might still be a good choice for some, but for others, waiting could save you a lot of money. And if you love insights like this, don't forget to subscribe to the Real Estate Scouts for more smart real estate tips and city breakdowns. Number 4. Santa Monica. Santa Monica may have beautiful beaches and a famous pier, but behind the postcard views lies a city that's becoming harder and harder to live in. Housing prices here are through the roof. The median home prices, well, over $1.5 million. And even small condos are selling for prices that would buy a mansion in other parts of the country. Rent isn't much better. Expect to pay over $3,000 a month for a one-bedroom apartment. And it's not just the cost of housing. Your everyday expenses, from groceries to gas, are among the highest in the state. Residents often say they feel like they're paying a premium for the Santa Monica lifestyle. But that lifestyle is getting harder to maintain. Then there's crime. Well, it's not the most dangerous city in California. Crime rates, especially property crimes like theft and burglary, have been rising. Many locals complain about safety concerns in certain areas. Even during daylight, the city also faces growing homelessness, which impacts public spaces and quality of life. Combined with heavy traffic and limited parking, living here can feel more like a daily battle than a dream. If you're thinking about moving to Santa Monica, weigh the costs carefully. The sunshine is free, but almost everything else will cost you big. For more straight talk about the California housing market, subscribe to the Real Estate Scout. We break down the reality behind the headlines. Number 3. Santa Monica. Santa Monica may have beautiful beaches and a famous pier, but behind the postcard views lies a city that's becoming harder and harder to live in. Housing prices here are through the roof. The median home price as well, over $1.5 million. And even small condos are selling for prices that would buy a mansion in other parts of the country. Rent isn't much better. Expect to pay over $3,000 a month for a one-bedroom apartment. And it's not just the cost of housing. Everyday expenses, from groceries to gas, are among the highest in the state. Residents often say they feel like they're paying a premium for the Santa Monica lifestyle, but that lifestyle is getting harder to maintain. Then there's crime. While it's not the most dangerous city in California, crime rates, especially property crimes like theft and burglary, have been rising. Many locals complain about safety concerns in certain areas, even during daylight. The city also faces growing homelessness, which impacts public spaces and quality of life. Combined with heavy traffic and limited parking, living here can feel more like a daily battle than a dream. If you're thinking about moving to Santa Monica, weigh the costs carefully. Sunshine is free, but almost everything else will cost you big. For more straight talk about the California housing market, subscribe to the Real Estate Scout. We break down the reality behind the headlines. Number 2. San Diego, the harsh reality behind the sunshine. San Diego is famous for its beaches, its perfect weather, and vibrant culture. But beneath the postcard image The city is becoming one of the most challenging places to live in Southern California. Home prices here have skyrocketed over the past decade, pushing the median well above $900,000. That means even a modest house can cost more than most families can realistically afford. The rental market isn't much better, with average rents hitting record highs. Many residents are being priced out of their own neighborhoods. On top of that, the city has seen rising crime rates in certain districts, especially property crimes and car thefts. Homelessness has also become a growing concern, impacting both residents and tourism. And while San Diego used to be a place where homes sold quickly, the market has cooled dramatically. Many sellers now face months of waiting, price cuts, and fewer qualified buyers. So, before you pack your bags for San Diego, remember, the sunshine may be free, but living here could cost you far more than you expect. Subscribe to Real Estate Scouts for more eye-opening real estate insights. We have top on the list is Los Angeles, where dreams cost more than gold. Los Angeles is often called the city of dreams, but for many residents, it's quickly becoming a financial nightmare. The median home price here hovers around $1 million, putting homeownership out of reach for most middle-class families. Even renting isn't easy, with average monthly rents pushing well over $3,000 in many neighborhoods. Add in skyrocketing property taxes, insurance rates, and the ever-increasing cost of living, and LA becomes one of the most expensive places in the country to call home. Traffic congestion is legendary, turning even short commutes into hours-long ordeals. Air quality continues to be a concern, and homelessness has reached crisis levels, thousands living on the streets across the city. And while some neighborhoods remain highly desirable, others struggle with rising crime rates, slower property sales, and declining affordability. For many, the glamour of Hollywood simply can't outweigh the financial and lifestyle challenges of living here. So before you buy into the LA dream, make sure you're ready for the price tag, and not just the one on the house. Subscribe to the Real Estate Scouts for more eye-opening real estate insights. And that wraps up our look at some of the most challenging places to buy in Southern California. But don't go anywhere, because next, we're covering other high-risk markets across the country, including Florida, Texas, and Nevada. If you found this breakdown helpful, make sure you hit that like button, subscribe to the Real Estate Scouts, and turn on the bell so you never miss our deep dives into the housing market. The more you know, the better your real estate decisions will be, and we're here to make sure you're always one step ahead.